It is Money Monday on Pittsburgh Today Live. Now, originally, we wanted to bring you tips on how to better protect yourself from identity theft. The tips are really important, and we're going to share those with you very soon. But today, we think it's important to switch gears a little bit and talk about the stock market, possibly your retirement savings and the coronavirus. Now, last week, the global markets, there you can see the graph. The global markets took a major hit. The Dow had its biggest one-day drop in history on Thursday. You can see that in this graphic, just how everything is going down. Now, what is going to happen today? All right, well, we hopefully can take, maybe if I go this way. No, we don't have it in there. But Wall Street is about to open around 9:30, and here's a look at the future numbers so far. Okay, the futures right now are not looking so great here. Another down day with these arrows. So it will be something that people will be watching very closely on Wall Street. Now, right now, the outbreak is mostly contained to China. However, the Centers for Disease Control and Prevention warns that it's only going to continue growing. There are fears for several industries, from tech companies to travel, and as their shares take a hit, so could ones that you actually own. So for today's Money Monday segment, Senior Vice President at Heffron Tillotson, Jamie Meredith, is joining us to tell us what this could mean for people at home. And I know a lot of people are watching this because if you've checked your 401k in the last week, it's noticeably gone down.
Right.
How low do you think things are going to go at this point?
We're probably not out of the woods yet completely. We still don't know really the extent of the virus. They're starting to get some numbers out of China. They're starting to understand it a little better, but we don't know how it's going to impact us here in the United States. You mentioned some important things in your opening, that you look at factories, you look at businesses. If your workers are at home and they can't go to work, you can't produce your product or your service. And that's a big hit on the economy, and that's what the markets, for the most part, are worried about, and that's why we saw that big sell-off last week.
And, you know, sometimes we talk about a slowdown, and the Federal Reserve steps in to make a move to change things, to lower interest rates. Even if they do that, and I know that's like 2 weeks away when they're expected to make a decision. Even if they do that, when you're dealing with something globally like this, can that make a difference? Can that really help?
Well, it does in the big scheme of things. So if you're a business and you're not selling your product, you still have expenses. You've got to pay your rent, you've got to pay your utilities, you still have to pay your workers. But if you don't have money coming in, then that's a worry. You may shut down. What the Fed's trying to do is provide something that we call liquidity. Basically, lower interest rates, allow borrowing to be easy and inexpensive, so a lot of these companies can go out and borrow and maybe use that as a band-aid until their workers are able to come back to work and they're able to produce their product. So the Fed providing liquidity in the market is something really, really important. You think back to 2008, one of the issues was people couldn't get money. Banks were afraid to lend, individuals were afraid to lend, liquidity dried up. With the Fed stepping in and saying, listen, we're going to do all we can to make sure that the gears of the markets are well lubricated, that really was one of the reasons on Friday when they came out and said that the markets kind of stopped the slide. NASDAQ was a little bit positive. The markets were a little bit relieved. That's one less thing they got to worry about, is how are these businesses going to get money?
In the end, is it going to end up, or could it end up, that stuff you buy in stores will end up costing more money? Because like the supply chain is different than we picture. Companies used to have these big warehouses, and now they're used to just shipping things from China. Workers are quarantined there, they can't get stuff out, right?
We're probably going to see what's called stockouts. You may not be able to buy the latest iPhone. You may be able to not be able to buy certain things in the stores that are produced in China. When we look at the impact of that on companies, they're going to fall into 3 or 4 buckets. Companies are going to be directly impacted. So if you look at cruise ships, airlines, hotels, if the outbreak gets worse, that may impact restaurants and bars and, heaven forbid, Kennywood and Disney World, because we as individuals may not want to go to crowded places, and so those places with lots of crowds may be hurt. You're going to have companies, on the other hand, that are going to benefit. You look at a company like Gilead. They think they may have a vaccine for this. Still in testing. Their stock is actually up. You look at 3M, they make all the masks that everybody wants to wear. Those are sold out everywhere. They're going to be pumping those out as fast as they can. And then you're also going to get companies that may have a temporary impact. Look at a car company. If your car breaks, They may not have the model that you want. You may defer that purchase, but eventually you're going to make that purchase.
Right.
So those companies may have what they're describing as a V shape. Stock may fall, but then when their inventory comes back in, it may climb again. So we are, as consumers, may be impacted. We may see prices go up, but most likely we're going to see some stock outs of some things, and we're just going to have to be patient because there will be almost certainly certain disruptions out there.
And finally, I want to ask you, I mean, is this a time that people should actually be buying stocks? We always get scared when we see it go down, but whenever it's at the very bottom, that's whenever you want to actually buy, right?
And you have to be patient because we're not sure if we are at the very bottom. We could see continued volatility as infections get worse, as we start to study the impact. But if you look at some of the numbers, Under Armour, for example, came out and said it's going to impact their sales about 1%. Their stock is down 20%.
Oh, wow.
So I would say that is a bit of a dislocation. What's the right answer? We're not sure. So for long-term investors, we always joke, we're the only industry that when we put things on sale, nobody wants to buy. Today, this week, may be a buying opportunity, but investors need to understand you're never going to nail the exact bottom. So we may see some more pain ahead, but long-term, almost everybody that studies this says the global economies are going to be unimpacted in the long term. Short-term pain, long-term back to normal.
Good to know. Important information. We really appreciate you being here
The most
today.
important thing is don't panic. Maybe don't open that envelope for a couple of months. Don't look at the statement.
Right, don't look at it, but don't panic.
We
Stay
don't
calm.
panic. Make smart decisions. Look at what you own. If you own airlines, if you own cruise ships, maybe you want to get out of those. You want to own some good quality companies that may not be impacted by this.
Very good advice. Thank you so much for being with us.
Great to be
Senior
here.
Vice President at Heffron Tillotson, Jamie Meredith, and we thank Heffron Tillotson, as always, for sponsoring our Money Monday segments. Now, for the latest on the coronavirus outbreak and the response in the U.S., you can visit kdka.com. We have all the information there for you.